Welcome back to the channel, everybody. My name's Artie with CoinCasso, and in this video, we go over the top news articles written over the weekend so that you guys can stay up to date and informed on everything going around in the cryptocurrency world. So Bitcoin and cryptocurrencies have calmed down since the huge peak on Thursday. We saw a little bit more of a rally on Sunday, hitting about 9,200. Let's jump into the news and find out if anything in particular happened that caused this fluctuation. Our first article is titled, "Digital Dollar Gives State Too Much Control Over Money." A bipartisan group of U.S. congressmen wrote Treasury Secretary Steven Mnuchin last week, urging him to consider the use of blockchain technology in administering the federal government's coronavirus response. This comes just months after the Democrats in the House and Senate proposed a bill that would allow individuals to hold checking accounts directly with Federal Reserve banks. Such accounts have been referred to as digital dollars, and such plans aim to both stimulate the economy with direct cash injections and bank the unbanked. Although this may seem like a new sleek idea riding the crest of enthusiasm over blockchains, digital currency, and financial inclusion, a similar proposal dubbed the Chicago Plan was considered by President Franklin Roosevelt during the Great Depression of the 1930s and ultimately rejected. Then, like now, the plan is not without benefits, but then, like now, it should be rejected because it would be one of the biggest power grabs in American history, politicizing our system of finance irrevocably. It is true that a digital dollar account, like private checking accounts, would be insured by the FDIC, but this should be cold comfort to Americans facing the specter of hyperinflation if such insurance was ever actually needed. It is true that as a lender of last resort, the Fed cannot, by definition, default, but neither can private banks if the Fed provides them with liquidity. Either way, if the economy gets back to the point where such a scenario is possible, people would just lose confidence in the Fed rather than individual banks. Another problem of centralization. The United States was founded with a deep skepticism, both principled and practical, of centralized authority. Now we have financial federalism where the banks are able to compete with one another to provide the best services. A national bank with virtually limitless power and resources is a huge deterrent to the free market and an even larger temptation to the autocrats. Basically, what this article is saying is that having the central banks own a federal digital currency, like a cryptocurrency, would put all other banks out of business. Everybody would be using the Fed digital dollar as opposed to going to a normal institution, thus causing a monopoly of sorts, which is illegal in the United States. My opinion on the topic is a little bit skewed from this person's perspective. I believe that traditional banks like Bank of America, Chase Bank, Wells Fargo, all of these systems are broken. They fee and tax their users beyond belief. The Federal Reserve adopting a digital dollar to replace or supplement the US currency, the fiat currency, the actual paperback dollar, would ease the system a lot and allow people to experience a digital cryptocurrency on a decentralized network. In this case, it would be centralized, but it would open up the entire population to this as a solution. And once they realize that central governments and central banks are a broken old technology, that'll convert more people into cryptocurrencies, and that will allow cryptocurrencies to actually become the new norm, which is the transition that we need to replace fiat currencies with digital currencies. I mean, if you think about the benefits of digital currencies, a bank, when you transfer money to somebody, your bank contacts their bank and then they get the money, right? So in between, each bank likes to take their cut. With digital currencies, I can transfer my digital currencies to anyone in the entire world with an internet connection for free. I am my own bank. I store my own money, and I am the person that authorizes the transaction. There's no bank, there's no intermediary, which is why I prefer cryptocurrencies to normal fiat currencies, because the only thing affecting the price of my currency is the global market and supply and demand. Whereas in the case of Venezuela, when you have a corrupt government, it causes hyperinflation. And so, your huge saving of 100,000 is absolutely worth $0, and maybe you could buy a loaf of bread. The global population is in control of cryptocurrencies, not centralized banks. I feel like this step needs to happen. I guess we'll just have to wait and see what happens with this whole federal digital currency. I'm just going to keep watching it and As the story unfolds, I'll let you guys know. And on to our next article of the day, which is titled Bitcoin Miners Usually Create 6 Blocks Per Hour. They just banged out 16. In an unusual deviation from the norm, Bitcoin miners just produced 16 blocks in 63 minutes. According to the Blockstream Bitcoin Block Explorer, 4 of the new blocks were reported within 46 seconds at 1900 UTC on Friday. Each new Bitcoin block is produced every 10 minutes on average. The exact time required to produce a new block can vary significantly depending on the part of the current mining difficulty level, which adjusts every 2016 blocks, or approximately once every 2 weeks. Bitcoin's anomalous spree of new blocks was first noticed by a Canadian Bitcoin financial services company. 4 blocks in less than a minute doesn't feel natural, but it's most likely only a variance. Such rapid block production could signal Bitcoin's current difficulty level is too low, meaning mining new blocks is too easy, or it could be a simple coincidence, the product of block time variability. The event coincides with a 6-month high in aggregate size of unconfirmed transactions in Bitcoin's mempool. Bitcoin transactions are sent to the mempool, which serves as a sort of holding depot. After they've been verified by non-mining nodes in the network, miners can then take transactions from the mempool and insert them into a new block, which are then added into the Bitcoin blockchain. The high number of unconfirmed transactions coincides with such rapid block production is curious given the job of Bitcoin miners to insert unconfirmed transactions into new blocks. No, I have no idea why this happened. If you guys are like super tech, incredibly smart, definitely comment down below so that our viewers can find out why. I mean, it could be the fact that there was such few amount of transactions in each one of these blocks that the hash rate was just much lower and allowed these supercomputers to solve it like that. And on to our last article of the day, which is the juiciest by far, titled American Buyers Are Fueling Bitcoin's Rally, Data Suggests. Bitcoin is now up over 20% in 2020 after rallying to over 9,500 on Thursday. The cryptocurrency's recovery from March's low ahead of the protocol's third halving event is primarily fueled by American investors, according to market data. On US-based exchanges, Bitcoin has traded at sustained premiums during the end of March and through April. Spot premiums indicate that exchange is experiencing strong buy-side pressure relative to other spot markets, signaling higher demand. By contrast, after the cycle lows in December 2018, Bitcoin spot prices on all dominant exchanges traded closely to the index price. Bitcoin future markets also reflect the strong bullish sentiment of American investors. When Bitcoin plunged to $3,867 on March 12th, open interest for Bitcoin futures markets across the industry plummeted by over 50%. Bitcoin's recent rally is healthier than previous upward trends, supported by strong growth in spot volumes on exchanges like Coinbase, while futures open interest remained relatively flat at $2 billion following the leverage flush during the March sell-off. Why Americans are scrambling to buy Bitcoins is an open question. Bitcoin's third halving event is less than 2 weeks away, and Google search data shows record interest in the event. Some buyers might be anticipating significant price inflation after the event. Like I mentioned last week, this is completely the American FOMO mentality, the fear of missing out. Everybody's talking about Bitcoin. The Bitcoin halving is coming up. The price dropped. It was discounted. Everybody wants to get back in. They don't want to miss out before it's above 10,000, and they think it's going to skyrocket to the moon in the next week and they can make some quick cash. But what's going to happen is all these people are going to inject into Bitcoin. Bitcoin's going to go up. The halving's going to happen. 4 months later, it'll steadily climb up. And eventually in 20 years, it'll be, the global currency that everybody talks about. And we'll do transactions in Satoshis, not entire Bitcoins, because a Bitcoin will be worth $1.8 million. Obviously, this is speculation, but that's what everybody's thinking. I'm happy about it because all these people buying Bitcoin is making my Bitcoins worth more. And that's it for the news, guys. I hope you guys enjoyed this episode. Please don't forget to like the Facebook page, subscribe to the YouTube channel. Join us again tomorrow when we go over the top cryptocurrency prices, as well as the news articles written in the last 24 hours so that you guys can stay up to date with all the current events. Thanks for watching, and we'll see you in the next video.